Buying a home isn't difficult, but what can be ultra confusing is figuring out your financing and ultimately what loan you should get. These two main loan types are agency and government. Now keep in mind that these loan programs are standardized, and each and every loan product out there has its pros and its cons. Here's your first quick mortgage tip. All of these credit guidelines are the same regardless of what bank, credit union, or mortgage guy or gal you actually talk to. That's right, you heard me correctly. The mortgage approval, the guidelines are all the same no matter what. So in reality, when you're talking about who you should use for your mortgage, you're not talking about what bank or lending institution they work for. You want to work with the best person to get you to the finish line. All right, now that we got that out of the way, let's jump right in and talk about loan types. The first loan type that we're going to talk about are agency loans, also known as conventional loans, conforming loans. And the second main type of loan programs that are available in the market are your government loans, typically an FHA loan or a VA loan. A conventional loan is typically the best bet for a consumer if you can qualify for it. And what I mean by that is if you have a credit score of 700 or higher and you have at least 5% down, then a conventional loan typically is the one for you. This is where you're going to get the best interest rate, lowest borrowing cost, and best overall mortgage product. So obviously the positive of this loan type is getting the best terms. Now the cons are it could be more difficult to qualify for. Moving on to the next thing, which is Govy loans, your VA and FHA loans. An FHA loan is a fantastic loan choice for all you borrowers out there that may have challenged credit and may not have a sizable down payment. Now on to the cons for this loan. Pretty straightforward. They're gonna have a higher total cost to acquire your mortgage. They charge you basically just to get the loan. And another quick pro tip, this charge is the same no matter what bank or credit union you use for your mortgage. So if you hear about some bank offering a better deal on an FHA loan, quite honestly, if you sift through the crap, it's all the same. The second con is the mortgage insurance on a monthly basis. Currently, it's required for the life of the loan. So even if you had 20% equity, you would still have mortgage insurance. So the key takeaway with an FHA loan, it really is just a short-term Band-Aid style of loan to help you acquire the property. And we're going to refinance this loan as soon as you qualify for what loan? That conventional loan. Now let's move on to VA loans, which is an exceptional product for all of our veterans, both current and retired service members. One of the key benefits of a VA loan is that you might not even need to put any money down. The next real sweet part of a VA loan is that there is no monthly mortgage insurance required, even if you don't put any money down. That can save you hundreds of dollars a month. Now there is one potential con for a VA loan, which the VA does have what they call a funding fee to utilize your benefits. The certificate of eligibility that you specifically will receive will tell us if you have to pay that or not. Bottom line, VA loans are really, really great, fantastic products, and we thank you for your service. And to recap, button this thing up, these are the two main types of loan products that are available in the marketplace. There are, however, way more products available in the non-agency space. Some of the other loan products out there are doctor loans, jumbo loans, self-employed borrower loans. You may have heard of bank statement programs, debt service coverage, and much more. The final mortgage pro tip is each and every one of these loan products is going to have its pros and its cons, but the underlying theme is the better qualified you are, the better overall borrowing cost and loan programs you're going to qualify for. In closing, no matter where you are in your home buying journey, it's never too early to start the mortgage finance process. The more prepared and better serviced you are by your mortgage lender, the more money you're going to save in the overall grand scheme of things when it comes to buying a property. It's never too early to get your financing in line. The truth is, the better prepared you are, the less your financing costs. You should work with somebody that you trust and welcomes you with open arms. So that's it for now. Go ahead, move on to that next lesson.